Hello, 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 everybody. How you guys doing? I am back. Took a couple of weeks off to get reorganized, doing some few things, updating some things. When we come back, we're gonna have a lot of good stuff for us. But today, talking about um, does personal credit impact your approval for business funding? Now, I see a lot of funding deals that come across my desk every day, and this is the most common issue: is a lot of people um, have been misinformed about how to get business funding, or they confuse business funding and business credit. Those are two separate things. But just like anything, um, credit in our society dictates a wide range of things. You have to have decent credit, good credit. The better your credit, the more options you have. And specifically when it comes to um, funding. Now, you might ask why. If I got a business, why can't I just get funding? Well, the banks haven't changed their rules. I say this all the time. The banks are looking for um, your credit worthiness, how you pay your bills, how long you had credit, have other lenders extended you credit, and they make their judgment based on that. And a lot of you guys, I don't know how many of you went and applied for the EIDL, the SBA for the government assistance from loan, SBA loan from the COVID relief, but those of us who did know that we got inquiries on our personal credit before we got approved. And is it the only factor? No, but it is a factor. Okay. Now, most of my business funding deals are traditional business loans. We do have non-traditional, do have SBA, we have alternative SBA. So we have a wide range of funding products to try to cater to individual needs, and quite frankly, sometimes we have to strategically plan it out step by step. You might have to start with a higher interest funding product to get to the lower interest term loan. Um, and usually credit is a factor in that. So, what are the lenders looking for? Okay. Here's some common missteps. People come to me and they say, I got a business and I got business credit. Can I get a loan? I'm like, okay, how long you been in business? If you have been in business less than a year, then you're already crossing off one or two options. If you've been in business a couple of years, then we have more options. Then I asked them, how much is your business revenue? And they, well, I haven't really started yet, or I've been in business for 2 years. Okay, how much are you making a month? If you're a business and you've been in business for 2 years, hopefully you're making, over $10,000 a month. That $10,000 mark is a cutoff. If you're below $10,000 a month, your options are limited. Okay, if you're above $10,000, then you have more options. Okay, and obviously your personal credit. And I want to distinguish between personal credit and business credit. If you're a business owner, you need business credit. Don't get me wrong, you are absolutely 100% need business credit because business credit gives you more buying options that's not associated with your personal credit. And you can build business credit without having good personal credit. So if you're a business owner and you don't have a business credit or establish your business credit, you need to get it because it will help your business grow. Okay. Um, Now, personal credit. Our whole society is built on personal credit. Personal credit determines where you live, um, what job you can get. Now they're checking your credit when you apply for a job. They're checking your credit when you go for an apartment, let alone buying a house. Okay, how much house can you afford? The better credit you have, the more house you can afford. Of course, your income has to compensate for that as well. But my point is, even if you have high income, and a lower credit score is going to restrict you to your buying options. Okay. The same thing for anything else that goes on in our society. America is built on credit. And I know we didn't sign up for this program, but we all in it. So we need to get our credits right. Okay. My lenders want to see that you have paid your bills on time, that you're not overutilized, that you have a mix of credit, okay, and that your income, you got some money coming in consistently that shows that you can afford the loan that you're asking for. Okay, they haven't reinvented the wheel, they haven't changed their protocols, they haven't done any of those things. So, and another thing that people misconception is I have an 80 business credit score, but if your business has no cash flow, how are you going to pay the loan back? All right, yeah, you got a good business credit score and you got some decent trade lines, but is the business making money? So those are some of the things that lenders are looking at when you apply for business loans. Now there are other options out there. Say you do have all those things, and your credit say is 650 or lower, and you got your business. You've been in business 5 years. You're making over $10,000. You're making $20,000. I've had people come to me with less than 600 credit score and make millions of dollars a year and have multiple locations. I think it was a dry cleaner. They had type of service. They had like 6 locations across the Midwest, and the 2 owners had subpar credit. The only thing I could get them was high interest business loans, and they didn't want that. They were offended by that, but they didn't understand that you make all this money, but you ain't paying your bills. So why would a lender, you're asking for $500,000. The lender, I found them the money, but it was at like 20%. So if they got the $500,000, they was going to pay back like $700,000, but because of their credit. See, this is how important it is. Okay. So the first thing you always want to do, and I tell all my affiliates this as well, if you're in the credit repair space and you want to get into the funding space, you have to fix the credit first. Not just fix it. It has to be a strong credit file. Just a high credit score doesn't automatically mean you're going to get approved. Okay, you have to have at least 2 or 3 or more trade lines, revolving trade lines that are under 50% utilization, preferably 30 to 20. The better, the lower, the better. And they used to need to be at least a year old. A bunch of new credit isn't really good either. It has to be seasoned at least 12 months. Okay, so they're looking for a minimum of 660 on all 3 bureaus, not one bureau, not my preferred bureau, but all 3 bureaus. You need to have all 3 of your credit profiles with TransUnion, Equifax, and Experian to be consistent. Now, I know there's going to be some variation, a couple of points here and there, but it shouldn't be a large variation. If there's a large variation, then there's something on the report that's not jiving with the other 2. Okay. And I don't need to tell you guys how to do credit repair, but that's what they're looking at. And here's the thing, when we go and we're shopping around for lenders, we don't know which bureau the lender is going to use, or if they use more than one. They might use multiple, they might use Experian, they might use TransUnion, they might use Equifax. So we want to make sure before we go into funding, we're going to look at your credit report and we're going to look and make sure everything is consistent, that everything, that all your revolving credit, that the balances are consistent, that one, it doesn't show overutilized. Okay. Another thing they're looking for is how many times you've applied for credit in the last 6 months. All lenders do this. If you've been shopping around for credit, you got 15 inquiries in the last 6 months, that makes them nervous. They're like, oh, he's for money. So why is he not getting it? Why is he asking us? They start thinking all kind of crazy thoughts. So no more than 4 inquiries on your personal credit in the last 6 months is preferred. Now, I've gotten people, through with 5 or 6, but 4 is our standard, what we're looking for. Okay. Revolving trade lines under 50% utilization. Okay. No late payments. You can't have any late payments on your credit report for the last 2 years. If it's older than 2 years, they overlook it. But if it's within the 2-year time frame, that's a disqualifier automatically. All right. As well as you got the mix of credit. So you should have, mortgage that's never been late or behind or missed a payment, car, 3 or 4 credit cards, personal loan that's paid off. All those things are beneficial, not required. I've gotten somebody $100,000 in funding who had the credit score, but he had went through a program and had all his trade lines removed. He only had 2 trade lines, and they were both care credit, and it took him several months to get the balances under 50% utilization. But once he did, he got the money. But he was a veteran too, so veterans are usually getting more money with some of our lenders. So that's very beneficial. If for veterans to apply for funding, they usually get a few more offers than non-veterans. That's just the way it is. I don't make the rules. Okay, so you got utilization, a mix of trade lines, no inquiries, no lates, no more than 4 inquiries in the last 6 months, and no lates in the last 2 years, and no collections at all. No other derogatory remarks. No collections at all. All collections have to be removed from the report. No bankruptcies. Child support, if you're behind and late, they only report child support if you're behind or late. That has to be fixed immediately. That has to be fixed. Anything that's derogatory has to be removed from the credit report when you're applying. This is for personal and business. Okay. The only time you can get business funding based on business credit is with an established business that's generating revenue, or you have some other asset as collateral. Your cash flow is your asset. They're usually it's for collateral, or it's got to be equipment or land or property or something. Banks are just not going to say, "Oh, I like you. I want to see you do well. Here's $100,000. Good luck. Hope you pay me back." That's not how it works. That's not how it works. They're in it to make money. So they want to make sure they give you this money, they're going to get their money back. Okay. And this is my standard litmus test is whatever the situation is, ask the right probing questions to find out the answers to the questions that I just laid out, time in business, how much you're making annually, monthly, what your personal credit is, what other assets do you have? Because you can borrow against your home, or you can borrow against some equipment if you own it and it's still worth some money, or your inventory. There's a lot of different options to borrow against, but personal credit is still going to be a factor. So you can have all those other things together, but a low personal credit score or a weak file. I see files people have 700 plus credit score, and there's no negatives, but it's all AUs. Okay. And I'm not against AUs. Okay. But we have to understand what their purpose is. Their purpose is to prop up the score, right? And it helps with mortgages. When you're going to buy a home, when you have clients to fix their credit to get them a pre-approval for a mortgage, is that they work wonders. But for lenders, they don't mean nothing to them. Like, okay, that's nice, but where's the real credit at? So it's not just a high score, it's got to be a strong file. So those are some tips that I wanted to give you guys about personal credit affecting when you're applying for business funding. And right now, during this time, I would recommend, if you can, build your business credit, get business funding, get personal loans, get whatever resources you can to get you through COVID and what happens after COVID. Optimistically, we think, things are going to get back to normal next year, but what's next? Position yourself, with your personal credit, your business financing on paper. How does your business look on paper? You know, you want investors to say, oh, this is a strong business, this is a solid business. I want to invest in this business. Okay. So you definitely want to get all your ducks in a row. Keep your credit card utilization down. You guys already hearing the horror stories about how these creditors are lowering people's limits when they pay it down. So they're protecting themselves. So you have to protect yourself as well and put yourself in a position so when you do need money, you can get it. All right. When you want to expand, you can get it. When you need to buy equipment, if you need to buy more trucks or tractor trailers, you know, equipment financing. Yeah, we do have that as well. Personal credit is a factor. You know, when you even with the fix and flip, you know, you don't. It's not the primary criteria for real estate investment financing, hard money, but the higher the better. The lower, you know, they're going to be like, I don't know, but the property becomes the equity or the collateral in the deal, but they still in it to make money. They want, and I will go over all these in about 2 weeks. I'm going to have my first funding class, and I'm going to go over all the funding conditions. And I'm posting that later today, so you can go sign up and get registered for the class. But I'm going to give all the jewels on all the funding deals, how to get funding, what type of funding is available, from everything from A to Z. So I'm the funding coach. I'm Jeremiah Davis. I just wanted to jump on here and give you guys a few tips on personal credit impacting your business funding. All right. Peace. See you next week.